Good morning, it's Jeffrey Cohen. It is Thursday, August 18. Tomorrow is Friday. Tomorrow is options expiration day for a lot of individual stocks. Today, we're going to talk about the markets. Now, the markets fell yesterday, or at least they were weak. We are not wearing a red shirt today. We are wearing a beige shirt today. We are neutral today. Not really sure what's going on. There's a bit of news across the market, and we're going to talk about it. And one of the things we're going to focus on this morning is Corbus Pharmaceutical Holdings, because this stock kind of represents the movement in the markets. And we are long Corbus, not a ton, not a huge position, but big enough that we follow it all day. And yesterday was a crazy day, so we're going to talk a little bit about that. But we're going to go through the markets first. So our yield curve, which is U.S. Treasury with the maturities, right? So 30-year maturity, 10-year maturity. You can see how the curve is up from 10 to 30. It looks like it's getting to be, it's close to 3%. It's 2.9, 3.15. It's getting close to 3% at the 10-year. But in fact, the market is 6 months and 2 years, and also for 1 year, is above 3%. So you're really talking about 3% money out there, which is still not that high. So the Fed is tightening, but the reality is the Fed can tighten policy rates by another 0.75%, and you'd have basically a flat 3% yield curve. And that's okay, I guess. If we look at corporate bonds yesterday, so yesterday was a tough day. Yesterday the market decided to just take a pause. It was a very red morning. It was interesting as it wasn't that red in the pre-market. So I don't think it was the big money guys who did that. I think just a lot of forces came to act upon the market. And so you do have corporate bonds falling yesterday. Lots of new week lows. Right, it's a bigger number. It's 228. Versus 61, and your decliners is now more than 3 to 1, like 3.5 to 1 decliners to advancers in the market. So my guess is interest rates went up on the U.S. Treasury, and my guess is that the risk premium on corporate bonds went up as well. So when you buy corporate bonds, you've got both sets of exposures. Let's take a look. 1 month treasuries, and we'll look at the 5-day. Right? So this is MarketWatch. We like their website. You can see yesterday the 1 month came up, and really it was kissing all week, this 2.2 level. Not enough to explain corporate bonds though, right? If you look at the 1 year treasury, yeah, they climbed yesterday. So something happened during the day and they came up. But then they came back down again to 3.3. So you've got 1 year bonds up. That could explain some of the corporate bond movement. A little more expensive during the day if they had to borrow money. If we look at the 10-year over the 5-day, now this is interesting. So the 10-year leapt up from 2.8. You can see Monday, Tuesday, it was like 2.75, 2.8. It jumped to 2.9. So yesterday, 10-year money went up by 0.1%, which also means that your mortgages became more expensive by 0.1%. This 10 years is going to reflect on mortgages. And so, it's coming down this morning, but realistically, right, all day yesterday, it was up 0.1% of 1%. That's an important number. Now, if we look at the 30-year, and you notice how I'm looking back over the week, because I think you have to take this week in stride. So through the week, the 30-year was around 3.1, and yesterday it climbed to 3.2. No. Ugh, I hate when they change this. So it climbed from 3.1 to 3.15. So 0.05% or 5 basis points. So not a huge rise, but still up yesterday. That also could explain some of the corporate debt weakness. So, but it's not a lot, you notice. 5 basis points, 10 basis points. So the question is, what happened? Was it investment grade or was it high yield? So the investment grade looks like it has more declines than advances. So probably people are starting to worry about the recession. And you notice how market indices yesterday were a bit red. Again, not a ton, right? The S&P 500 is still right around 4,300. Now, I know there's talk about the 200-day simple moving average and is this 2008 all over again and is Rome burning and I got a statue of Buddha, right? If I rub Buddha's belly, does the market go up? All this stuff is a lot of hocus pocus. What I'll tell you is market's been doing great. And so fine, it fell yesterday a little bit. It doesn't mean that Rome is burning, and Rome didn't burn that much. It went down 31 points, or 0.75%. This S&P 500 is huge. We got a 401k statement. Money's good right now, right? Investments are up over the past quarter. People feel happy. And so we could look at the volumes, right? Advancing volume versus decliners. Now, what's interesting is the New York Stock Exchange, right? It was 75-25. 75-25, 75-25. And so lots of declining volume as well. So maybe it was a bad day. Maybe it was the pivot that we're all waiting for, right? If you look at what happened yesterday people got out of small cap growth stocks. So it is possible Corbis Pharmaceuticals is a small cap. It's worth trading about $25 million market cap. $30.5 million market cap. And it is a growth stock. It has no income. It has no revenue. It is a bet on the future of their drug discovery, which is very, very, very risky. And so if you're investing in Corbis, you need to be able to lose all your money. Because Corbis is a bet on the future. It is a long duration bet that they can raise money over and over again, that they can work on these drugs, which is effectively in the intersection of immune response, oncology, and cannabis, or the endocannabinoid system. It's complicated, and Corbis has reduced their cash drain. They are focused on developing more and more drug candidates to having a much richer drug pipeline. But realistically, the market is trading Corbis as if all the pipeline of their drugs is zeros, and the money's going to get spent. Okay. So, but this is a sign of the market, right? Large cap value did okay yesterday. In fact, if we take a look at a large cap value stock that we like, that we traded last week, which afforded us a significant amount of bling bling that we showed on earlier this week, Verizon fell 1%. So Corbis fell yesterday 12%. You can see the big drop, big red. Verizon dropped 1%. Light pink. And over the week, it's still very green. Over the month, hugely green. It's just so interesting, right? The market, a little sensitive right now, right? Sensitive. Morningstar indices, sensitive, economically sensitive stocks were down. Cyclical stocks way down. Defensive did better. People are hiding right now. Trust me, I understand. It's a hard time right now. So let's see, what do we have here? World indices. It's a lot of red. Asia's red. Although, hang on. How's the Nikkei? By the way, our friends in Jakarta, Indonesia, another green day. We love Indonesia. We love the people. We love that they're an ally of the United States, by the way. peace, right? God bless America and all her ships at sea. Europe is green. It's interesting. I guess Europe decided that the Fed pivot or the Fed tightening or whatever we got going on now, right? It's basically quantitative tightening. The Fed is tightening the money supply. The Fed is making money more expensive. It is happening, right? But Asia, very red. And so that's tough right now. I think we got to move over to the futures. Futures are green. VIX is down. All is forgiven. Bonds are up. Interest rates are down. That's how you can read these futures. I don't read them that way. So I think this is interesting. All right, we're going to take a little bit of a break this morning, right? The futures being green is a little bit of a surprise to us after yesterday's trade. And we're going to do a tiny little bit of homework, I think. And we're going to come right back out to you. So have a great day in the markets today. We do not get paid to make these videos. You're hitting the subscription button. Hit subscribe. It's free. All you really do is you get notifications that we're online. It helps us. And so what I'd say is, good luck out there. Just a moment on Corbis. So pre-market, Corbis has been running hotter all week. But if you look at it over the past month, you can see Corbis is in a relentless decline. It was trading close to 30, came down to 25 in late July. Now into mid to end of August, it's trading down closer to 20 on exceptionally higher volumes. So if you take a look at that. So this is not a good time to be a Corbis shareholder. We looked at the options. There's not a lot of movement on the options. There's not a lot of volume. So this is really all happening in the common. So I'll talk for a minute on Corbis because I think it's interesting. Again, for those just tuning in, we are long Corbis, and so you should take everything we say with a grain of salt. We are bullish on Corbis, but it's really, really hard right now to be bullish on Corbis. So we had shown this trading range in an earlier video. I'm going to go to the 15-minute because I want you to see this. So what had happened was Corbis was doing fine, right? It's still in a downturn, but it was trading around 26, 27 cents a share on basically no volume, right? So it wasn't really, nothing was really happening, okay? Which is fine. And then all of a sudden you had a pop in volume and it took it up to 27, 28 cents a share. And then boom, it fell back to 25. And then I call this the battle for 25. Because it rose and it fell. And every time it rose, it fell. And it fell hard. It fell hard. And then all of a sudden, this is the pivot point when everything changed. On August 16. It's only August 18. I can't believe it's only been 2 days. And it was at this point that, so we follow the market. We use, NASDAQ Book Viewer. And it gives us the market action. So if we go to NASDAQ Book Viewer and we log in, please don't hack my account. And we launch Book Viewer and we take a look at Corbis. And you can see a lot of information. You can see who's doing the trading, the market value of the trade, how many orders. That's if you look at it sorted by price. The total number of shares, and you can do that for buyers and you can do it for sellers. And so we're going to just have some fun here. We are only going to look at the ask, the number of shares, and the totals on the sellers, but we're going to look at it from a buyer's perspective. It's not the way you would trade, but it's interesting, right? And so I want to see who's out there in pre-market offering to buy. Because this puts a floor under people to trade. And it gives a sense of confidence, right? And so the first place right here is at 23 cents. So 23 cents, there's not a lot of shares, 3,700 shares. But there's about 10,000 shares, 11,000 shares at 22 cents. And then there's another, looks like about 20,000 shares at 21 cents. And then there's another 15,000 shares at 20 cents. And what's interesting is, so you have like 20,000 shares at these I call them circuit breakers. Right? 23 cents, 22 cents, 21 cents, 20 cents. But if you look at how people are building the orders, they're building them eight shares at 23 cents a share, 50 shares, 100 shares, 1,000 shares. So 1,000 shares is $230. So that's less than one share of Tesla. So this is not a big dollar play. I almost feel like I'm going to go to Willy Wonka and the Chocolate Factory, and I'm going to see a bunch of kids running around getting a factory tour. That's what this feels like to me. It feels like Jelly Beans, Jelly Belly, Jelly Bean factory tour with all the kids in the little electric carts. Oh, I'll buy one share at 23 cents. This also could be computerized trading, right? Where if the trigger hits because I made one share, then, all right, everybody jump back down to 22 cents. And so you look at these levels, and these levels are meant to give you some confidence. 23 cents a share. And then the 22 cent a share loading was at 5 in the morning Eastern. So people loaded the boat at 4:36 a.m. Eastern time, 20 shares at 22 cents, then 21 cents at 4:30 in the morning. So these are some I don't understand, right? Like, I'm not this kind of a trader. I don't load my boat this way. And now you see it on the other side. You see on the sell orders, you got 12,839, right? It's one order to sell at 24 cents. And then we got 25 cents. Got a few, 26 cents, 27 cents, 28 cents, lots of shares at 28 cents. I guess people are expecting this to go to 28 cents today. Or they just want to know, right? They want to know whether there's enough volume, right, to drive this thing up. So 12,800 shares at 24, 15,600 at 25. So lots of little orders on the buy, big orders on the sell. It's almost like they want to slow down the move up. You could quickly go down, work your way down, but it's a slow up. So I don't understand this. And what we noticed, if I go back to the chart, because there's a reason I'm sharing this with you. Yeah, I got killed on Corvus yesterday. It went down 12%. So if we go back to the chart, this was the first time that the rug got pulled and the buyers all canceled their orders at the same time. And then yesterday was so interesting. So then pre-market, the stock went up to like 30 cents a share. Now, if that's not painting the tape, I don't know what is. And there it is again. It went up to 35 cents a share. And at this point, it traded as high as 47 cents a share. Who's paying 47 cents a share for Corvus? Who's paying 37 cents a share for Corvus? Who's paying 35 cents a share for Corvus? Unless you're just painting the tape and you're trying to trick the algos. I don't know. So now, yesterday. Let's focus on yesterday. Because I watched the stock all day. I didn't buy any. I didn't sell any. I wasn't trading yesterday. I was actually working on my office and watching the stocks and listening to Judas Priest. And, right now we don't have a lot of activity in the market. It's summer doldrums. And Hallador Energy was short sale restricted. And so Hallador wasn't moving yesterday. I just think it's important to show it. We'll look at it for the 5-minute on Hallador yesterday. It was just flat as a pancake. And the reason is, right, you can't short it when it's short sale restricted. You can a little, but not a lot. You have to do it on upticks, whatever. So, of course, this morning, my guess is its short sale is opened, and it's back to 621. American share. So Hallador Energy didn't keep our attention. We are short Hallador Energy. We are because we believe that they are running into a liquidity crunch. And there's only so many insiders. There's only so many friends and family that are going to lend them money. And that's all I'm going to say about it. Because actually I love what they're doing. I love the fact that they are going out and working every day, Hallador Energy, and they are digging for coal. And thank God, because we need the energy. I just don't think this one makes it. But that's on me, right? And I'm putting my money where my mouth is. This is not just idle chit chat. I don't do a lot of idle chit chat on individual stocks that are thinly traded. Put the money where the mouth is. So we're going to draw a couple of lines here. So this is American Shared Hospital Services. And there's a new range. There's a new sheriff in town, right? But not that long ago, the stock was here. And so I think it's important because these lines are going to intersect in a few days. And so this upward trend happened because American Shared Hospital Service is improving their business. And I remember we said, there's not a lot of volume. We're going to personally buy the hell out of this stock and make the price go up. We didn't quite say it that way. What we said was, we're going to double the volume of this stock because there were days when it was trading like 1,300 shares. So it was not that hard to buy 1,300 shares and just say, oh, we doubled the volume. Yay, great. My Vanguard account looks great. Stock's up, right? I've never sold a share of American Shared Hospital Service since I started buying it. Never sold a share. Love the stock. Love the business, right? Radiology, oncology, cancer treatments, and they provide leasing and they take a risk with the equipment. They share it with the hospital or medical group, and sometimes they own their own facility. They're in Gamma Knife. I want to say 16% market share of all Gamma Knife installations. They're in particle beam radiation therapy through the Mevion systems. And now they just did a joint venture in Puebla, Mexico for a linear accelerator. That's cool. These guys are in, they're expanding. They hired a marketing person. They're doing good things. They raised revenue 12.5% and they doubled net income. Okay, I like that. I love watching the tape on Corbis. I hope you're watching, people. Let's take a look. We'll sort it by price. You can see 10 orders at the top of the book. Ooh, I got to do the thing with the number of orders and all that. Now I need to see it. I need all the data. Right? Because I made the point, but now let's look. So, very few sell orders. Doesn't mean that when the market opens, they're not going to sell the hell out of this thing. But if you look, you crossed the 100,000 share mark at 29 cents. On the buy side, you don't even get to 100,000 shares. No one really wants to buy Corbis. They want to sell Corbis, right? And what happens is if you do this thing down to 30, show me the 30 tops. You can see 84,000 shares on buy. And the halfway point is at 21 cents. 176,000 shares to sell And the halfway point, let's call it 85,000 shares, is right there at 28 cents. So lots of movement. I mean, I wish that there was a 25-cent option because this thing would be going crazy. But there's dollar options on Corbis. And the chance of this thing going to $1 in your or my lifetime is probably about the same chance of my daughter going to my alma mater, University of Chicago. I'd love for her to go. I'd pay for her to go. I really want her to go to University of Chicago, study economics, follow in the footsteps of giants. Probably not going. Just like Corbis. I'd love for it to go to $1. I'd love for Lenabison to do it, to get approved, right? Yeah. This thing's $7 a share if that happens. I'm not holding my breath. It'd be fine if my daughter wants to go to a state school. University of Illinois is a fine school. They got good computer science programs. It's fine. She would do well to go to University of Illinois. She's got great grades too. Love it. All right, here's a funny side note. Total tangent while we watch Corbis. Why is it that young women are shy about ambition? Not all of them. But why is it? My daughter's so nice. She's like the nicest person. She's got high EQ. Super nice person, right? Polite, kind, loves animals. And when I talk to her about being president of the United States, running for office, we're running for office. Jeffrey Cohen, Water Reclamation District. Ward 5, I want to be a trustee. I want to be your clean water candidate, and I want to represent you in Lake County, Illinois. By the way, most of you people watching are like in Indonesia or France. Like a few of you are in the U.S., not many. So you can't vote for me. And I'm not asking you for money either. I mean, if you wanted to send me a check, I'd love it, right? But truthfully, that's not what this is about. What this is about is you run for office and you help serve the people. God, that's so stupid. Yeah, $10,000 a year salary to help the people make sure they have clean water and a clean environment. So I explained to her, you could be a senator someday, honey, or a congresswoman. You could run a company. You could be a scientist. You could do all these things. And I don't know. I'm too shy. I don't know. You could be president of the United States if you want to. Well, I don't think I want to be president. So I think it's a thing. I think we all got to push our kids to do what they're capable of and then let them decide what it is their passion is. But don't be afraid. If you have a shy person in your house, build them up. Give them good pep talks, right? Let them know that they're special. Let them know that they're smart, hardworking, that they're clever, that they're diligent, that they can do whatever they want to do in life, because our children are our future. And that's important. And if you're out there listening, Victor and Lucas, you guys are very special as well. And Priscilla, and Declan, and Faith, you guys all have the future at your feet. You can do whatever you want to do. God gave you a purpose and God gave you a mission. And I want you to think, children, about mortgage-backed securities. I want you to think about the price of mortgages. Do you know that a 30-year fixed-rate mortgage is up 0.2% to 5.5%? This is going to hurt the housing market. Already in trouble. And so, children, if you're looking to buy a house, you probably should have locked in that rate last week. Because now with interest rates rising, it's going to be that much tougher to buy that home of your dreams. And if you look at mortgage-backed securities, you can see that they're down today, significantly weaker. Now, I don't know about you, but I track the mortgage-backed securities because I track the people that own them. And you can see the downward trajectory on mortgage-backed securities seems to be continuing. Now, I don't know about you, but that would give me pause to invest in an institution that holds a lot of mortgage-backed securities. And that would tell me that if this trend continues, if the 10 and the 30-year bond trend continues higher, children, I want you to focus on this. 30-year Treasury bonds are above 3% for the first time. It's fine. For the first time since 2018, when the last banking crisis hit. And they were 3% in 2015, so every 3 years, and 2013. So it is rare that the 30-year goes up to 3%, but it's not unusual. It could go up to 5%. If that's the case, your mortgages are going to be 8%. And housing is going to be soon out of your reach. So please, people, start worrying about your 30-year Treasury bond yields. Worry about it, because with inflation running at 9%, the Fed's going to have to raise interest rates. Now, the Fed only affects 1-month treasuries or policy rates, right? Short money, immediate money, right? And you can see that the Fed kept rates close to zero for a very long time. They're not naturally zero. They're naturally 1.5%, 2%. And they drove it into the dirt. And by the way, that causes inflation. So now they took it up to 2%. The question is, will they take it up to 3%, 4%? It's hard to know. And unlimited credit to corporations that need it and banks that need it. If we look at the 1-year Treasury, same thing. The 1 year was trading very close to zero. Kids, if you're listening, you should have borrowed all that money that you could have last year. Because this year, getting expensive. If you're a corporation that needs to refinance, if you're Hallador Energy, right now you're borrowing money from insiders using convertible debt securities. Now, a convertible debt security is great because you issue it and you normally say that you can convert to equity, maybe at a higher equity price. So if the stock goes up, you get to enjoy the benefits of a company that took your credits and made money. A convertible security is supposed to benefit the bondholder with some of that equity upside. But Hallador Energy does it differently. Hallador Energy said, I want you to benefit from the upside of the equity right now. So what they do, and we're gonna go back. We're gonna get rid of the drawings, and we're just gonna show Hallador Energy for the past 3 months. And what Hallador Energy did is they said, look, we're gonna pay 8% on a promissory note convertible, but we're only gonna sell it to insiders. Like 4 of the 5 were insiders, right? And what they did was they priced the convertible security as the stock was going up so that it would be less than the stock price. So I think the first one was at 4.25, but they did it or like $4, something like that. And so the price went up. And then they did it again in May, and they did it again in August. So what they're doing is that they're issuing convertible securities with an immediate equity upside to the borrowers so that they have an incentive to convert immediately from debt to equity and then potentially, or not, sell the equity in the open market. Or short the equity and then buy it back, right? So they could have been shorting the equity very early. Like they could have known this was coming. Oh yeah, we're going to be borrowing like $30 million from you guys. So back here, why don't you short the hell out of it at like $2 a share? And then we're going to issue you stock, and then you can use that. I don't know how they're going to do this. You wouldn't short it. No. What did you do? How did you do? I don't even know what they did. What they did was they offered convertible securities, and then they had all of the people that bought them immediately convert them to equity and make a huge profit on the conversion price. But I don't see evidence that they sold the equity that they converted. I just don't see the volume. And so it's possible that they sold to insiders who wrote it up like this and are actually holding the equity, and that they're holding the equity. It's possible. I don't know. Okay, but that's not normal. That's not the way it normally works. The way it normally works, what we talked about, is you borrow the money, and when the price goes up on money, and we'll go to the 10-year again, if you're doing corporate bonds and you're at 10-year money and you realize that the Fed has been keeping 10-year money, the Fed doesn't do anything with 10-year money. I apologize. The market drives the 10-year and the 30-year money. It's the market that decides. So the market decided in 2020 that I'm going to hide. I'm going to hide in bonds. I'm going to bid the price down to less than 1%. The yield, the equivalent yield of less than 1%. And then 1.5%, now 3%. And so maybe they don't want to pay so much. Maybe with inflation at 9%, 10-year money at 3% isn't such a good deal. So it wouldn't surprise me if fixed income rates climb even further. It doesn't surprise me. If that's the case, by the way, the casualty of rising 10-year Treasury notes is the housing market. It's mortgage-backed securities. When interest rates rise, mortgage-backed securities fall. It's just the way it is. I'm sorry. It's just the way it is. When interest rates rise, mortgage-backed securities fall. When the risk of repayment rises, mortgage-backed securities fall. It's so interesting, right? Because I'm not hearing anything about recession. I'm not hearing anything about the consumer capitulating. I'm hearing about, lots of jobs, hard to hire. And so maybe that's still the place we're at. So to close it off on Corbis, so something weird happened last night. So while we were watching Corbis, what happened is that the stock, I don't see it here. I don't know what Yahoo Finance is doing here, but the stock dropped yesterday to $21.45 a share. And it dropped on 2.7 million shares traded on close. That's crazy. 2.7 million shares. It makes pre-market look like a joke. It's a joke. 2.7 million shares. It's a joke. That's a ton. That's a ton. And there's no news. It's just action. It's just action. So let's take a look at the COVID numbers. Maybe that's going to help us. COVID's trending lower. New hospitalizations, although they were higher, new hospitalizations are still pretty good there at 5,800. To be honest, though, I don't know that that's great. 5,000 people go to the hospital every day with COVID. Sounds pretty crappy. Let's look at Illinois. We live in Illinois. We are Illinois registered investment advisors. We are non-discretionary investment advisors that run a quantitative model that looks at all the stocks that traded today, that also traded continuously for a year, that pass our data validation steps. And you can see in Illinois, the number of hospitalizations is actually staying higher. That's not good. Illinois has fewer cases that are confirmed, right? 3,550 7-day average. But hospitalizations are 230. Those are confirmed. There's people going to the hospital. There may not be a lot of COVID tests being taken now. And so it's a pretty high number. So COVID's not over. Okay. But I don't think COVID's driving the price. If we look at the stocks yesterday, I always find this one interesting. This is a bubble chart sector. And we're going to look at over 10 billion stocks. TJ Maxx went up. What's the change? How about this? Let's look at sales growth quarter by quarter. No one's growing sales. Except for your cruise lines. Cruise lines showed some sales. And Live Nation Entertainment, that's really interesting. Not a lot of sales growth. Let's look at earnings per share growth. Okay, insurance. AIG, run for the hills when AIG's making money. You know what happened last time. MGM, so people are gambling. Valero, and MRO, so you've got the oil refinery and an oil exploration production. Baker Hughes did not have good earnings growth. So I always like to look at how about gross margins? Wow, you have stocks like Dominion Energy, 99.6% gross margin. I'm not sure that I buy those numbers. Meta Platform, I buy that at 80% margin. Alphabet, 56% margin. That's why, guys, that these stocks are trading so high. Microsoft is 68% margin. These guys are printing money. As long as gross margins are high, you're probably okay in this market. You're probably not going to be in that much trouble. When those gross margins start to fall, that's when you better start running for the hills. So futures are only lightly green. I feel better now because I was wondering why that futures were so green. It was like hurting my feelings. But you're still at 4282 on the S&P 500. The VIX is the same. It hasn't moved since yesterday. Now, yesterday it rose. There were a lot of investments and puts yesterday, but today it's the same. Copper at 363 is showing a little bit of economic strength there. And silver coming back to kiss 20 bucks. So what that says to me is maybe yesterday was an anomaly and maybe everything is awesome again. The economy is going to do great. We're back in business. We're going up. Gross margins are strong. Look at that. Crude oil is coming back up again. Maybe it's time. Look at that. Gasoline back up almost to $3 wholesale. Maybe it's time to bid this market up. Maybe yesterday was when we shook out the weak hands. Look at Corbis at $23.64 a share in pre-market on 1.75 million shares. So somebody bought all that stock at $21.45, and they're selling it right now at $23.62. They're making 2 cents a share. They're making 8%. God, I love watching Corbis because it's real hustle. It's real like shoe leather. You got to go out there and you got to take a stand and you got to buy this shit at 20 cents. This thing traded down to 20 cents. And then it's 29 cents. There's people making money penny by penny on Corbis. And within a volume, it's starting to matter. I love it. I love watching it. Okay. U.S. weekly initial job claims show no sign of rising layoffs. Philadelphia Regional Factory Index moves into positive territory in August. Let's go see if FinViz has any positive news. Maybe the story is changing. Okay, futures are muted as they're worried about the Fed policy concerns. That I can understand. Oh yeah, jobless claims drop. Oh yeah. Jobless claims are dropping. Where's the market? These are economically sensitive stocks moving pre-market. China is ramping up Swiss gold imports. The Fed ticks higher ahead of the weekly jobless claims. So jobless claims, it's probably from Bureau of Labor Statistics. All right. So interesting. Where's the news? There's no news. It's just jobless claims looked a little better. Let's go to CNN. Let's see if there's any narrative. All right, they're talking about Trump. They're talking about drought. Those are not economic things. Squash a subpoena. Tax credits. Tiger Woods. Ukraine. Live updates. Let's see what's happening with Ukraine. Crowdfunding helps Ukraine secure access to satellites. Okay. Russia deploys jets armed with supersonic missiles to Kaliningrad. I want you to think about what that means. Where is Kaliningrad? Do you know? Can you say it's in the doorsteps of Helsinki, Finland? Can you say that Kaliningrad, you might as well... Right here. If I'm right... It's right here around St. Petersburg. So this is a major military base. Right around St. Petersburg. That is what I'm thinking, right? No. I'm sorry. I was wrong. I was wrong. It's here. It's here. Oh, it's in the Baltics. Oh, yeah. Lithuania, Latvia, Estonia, Poland. You're in striking distance of Germany, Denmark, Copenhagen, Stockholm. I've got the Stockholm Syndrome. So, that's so interesting. So, okay. So, hypersonic missiles are pretty dangerous. They're very fast. Deadly strike, Ukraine's second largest city. So, Kharkov. Russian attacks on the Ukrainian east. Oh my God, Putin to reward mothers of large families. Radiation disaster. So when this is the news, guys, it tells me they're painting the tape. Putin is giving awards for women who have a lot of babies. All right, I got to tell you this. This is news? This is not news. I don't know. What are we doing here? All right, Corbis is up to 24 cents a share. I love it, man. You know, you freak out. You panic. You freak out. Oh, Rome is burning. I'm losing all my money. Look at that line. See that line? That's 24 cents. Oh. Maybe it's all going to be okay, or maybe the market maker wants to get out of their 21.45 stocks, and they have to sell like 2 million shares of it. I don't know. I don't know what's happening, guys. I just think this is market. This This is all inside baseball. 1.75 million shares traded pre-market, trading well above where you were at the close. Some market maker is, I can almost imagine, right, the managing director of the firm saying, you better get out of Corbis. You better sell every friggin' share of that 2.7 million shares you bought last night at the close. I want this off my books by Friday, or you are fired. That's the conversation they're having at the market makers. All right, let's see. Now that I've kind of talked myself into a froth, how do I feel about Corbis? So first off, I'm going to make another video on Corbis. I like Corbis. I do. I like the fundamentals of the company. I just hate to see all this market manipulation. All right, what do we got here? Anything on zero hedge? I'm not seeing anything. I don't see anything relevant to the stock market. Well, this is good news. Maybe there's just some good news. So, Turkey has a very high consumer price index rate. Now, you know I've talked about it, right? The interest rate was 17.5%. So it isn't. They actually had lowered the interest rate to 14%, and now it's 13%. So that's interesting, actually. So I'm going to look at the Turkey thing. That's interesting. And there's good news. Turkey and Israel fully normalized their ties. That's actually really good news. That's super good news. That's the kind of news that improves stability in the Middle East. Yeah, and everyone can support the Palestinian people. Even Israel should be supporting the Palestinian people and helping out Gaza, right? You know, give them some money, maybe give them some food. What, you're going to begrudge them a sandwich? Give everyone in Gaza a sandwich once a week. You know, there won't be a war anymore. Create some jobs, some construction work, right? Gaza's pretty rough. I've never been there, but I've seen videos. It's pretty rough there. I can imagine between Turkey and Israel, they give everyone in Gaza a sandwich once a week to help create some jobs. Maybe they could export something, or they could make something. Maybe they could make semiconductor chips like they do in Taiwan. If China invades Taiwan, then we move the semiconductor factories to Gaza. I don't know. Get them some money. Get them some business. You know, when you're making money and you have something to lose, you don't fire rockets at people. You focus on keeping what you have. And so maybe this Israel-Turkey thing is good, and maybe it's going to help the Palestinians at the end of the day. Give them a sandwich. Do something. Honestly, I like turkey. Turkey sandwiches. And so turkey sandwiches, maybe we got something here. Help the Gaza people. You know, I looked at, I used to do a lot of satellite mapping of Gaza. There's some areas there with some green grass. You could probably build some factories. And so you just got to keep them from blowing themselves up. That's all. Let's go back to interest rates. How we doing? 2.13, no change. The one-year Treasury yields, they're just bouncing. 10-year Treasury, it's just a bounce. There's no movement. And the 30-year Treasury, also not really moving. So interest rates are not really moving. We'll do a quick look, pre-market. Regional banks. How are we doing on the regionals? We look pre-market. We see some are down, like 6 are down. And it looks like about 10 are up. The ones going up are not really the risky ones. Although I'm fascinated that Zion Bank Shares is going up. We're going to take a little look-see at Zion again. Zion is not one of your most expensive. Now, Bank First, down to 115, that is an expensive one. Let's see who else is moving pre-market. A couple of banks I care about, and maybe Zion is one of them. Quantum computing companies. Okay, not a lot of movement. Nice to see D-Wave above $10 again. Computer manufacturers. I see Cisco is up. I guess they've just solved their supply chain issues. It's nice to see. That was the issue, is that they were saying they were going to have less earnings because of supply chain issues largely out of Taiwan. It's mixed. Mixed bag. Chips and semiconductors. It's a mixed bag. It's hard because the S&P futures are only up 0.15%. They are up, but I'm not seeing a lot of conviction here. And when you see a mix in the chips and dips, that tells me I'm not sure I buy at the open. I think I may wait a minute. Cannabis is up. Okay. Cannabis and tobacco are up. Crypto and miners? Well, your physical miners are up. I think the narrative is that the recession's over. And I think the narrative is now that Bitcoin, people aren't afraid. It's at 23.5. It's trading in that support range, not really moving. But you look, and there's strength in the Bitcoin miners. That's interesting. Specialty retail. Bed Bath & Beyond coming down. We looked at that yesterday. We did a whole look at the market, frothiness of the market. And you look at Bed Bath & Beyond, and now it's not doing great. Kohl's is down. Kohl's put himself on the auction block. They're trading at book value. I mean, who am I to say, right? Kohl's. Trading at book. It's down. Not a lot of shares trading, though. Looks like somebody maybe has a position they got to get out of. Money managers. I love the money managers, right? Because Raymond James is down 5%. Now, that's interesting. I wonder what they did. Excuse me, I shivered when I thought of Raymond James. I shiver. No, not a lot of movement. Really just Raymond James. And let's look at our walking wounded. So we added our 3 stocks to the walking wounded so we wouldn't have to show you how much money we were making or losing in the stock market. So we added the 3 of them up there where we have positions. But pre-market, Party City's down. But these are a lot of companies that have either jacked up or jacked down. And it's interesting. Verizon's down again. What happened to my poor Verizon? Poor Verizon. It's awful. It's awful to look at this. Corbis is up. Not much. A couple of pennies. All right. Well, this helps. This helps to figure out where we are this morning. I'm really glad to hear about the Turkey and Israel normalizing relations. I think that's good for the Middle East. I think the futures, I'm not sure how confident I am on the futures, but at least they're up. And if you look at the S&P, so maybe that's something to talk about. Do a last moment on the S&P 500. So there's talk there's a lot of talk that the S&P 500 moving average. Now, how do I put the moving average on here? Moving average, 200-day moving average. We're going to make it black. And we'll do it at the close. We'll do it at the adjusted close. And we're going to do a weighted average. I know everyone likes to do a simple average, but we'll do a weighted average. Where is it? No offset. Well, you don't like it? All right, fine. I'll do a simple average. Oh, it's got to be daily. I'm sorry. That was stupid. No, where'd it go? We don't like to... I know. I hear you, Pumpkin. I hear you. We'll do the close. There it is. All right. Excuse me one second. I got to get my cat. Cat's outside. All right. Hey, cat. Hey, Pump. I know you want to do a cat cameo. No cat cameo today. Sorry. So bringing out my bling. Bling, bling. I just figured out my trade of the day. Look at that, baby. Look at that. Oh, yeah. Oh, yeah. You know, I bought these with recent gains. Big, big bling. Big money. I can smell it. Corbis. It's going to $1 a share, baby. I'm going to will it to happen. I'm going to believe. Today is the day to believe. But let me explain what also today is. Today is the day when the 200-day moving average meets the upward trajectory of the stock. And so the stock market, this is the S&P 500, so I just need to show it to you. It's really important. So the S&P 500 was on this upward climb, and I really didn't want to do simple. I wanted to do weighted. So let's see if it'll let me. This is what I like. 200-day moving average, weighted, based on the close. Now I could do high-low divided by 2 because there's manipulation at the close. Same thing, doesn't matter. So we'll go back to the close just to keep it simple. By the way, thank you so much, Yahoo Finance. You're an awesome website. So the market kissed the 200-day moving average last in 2020. And if I go back, it crashed through when COVID hit. So it had also crashed through in 2018, 2019 when the banking crisis hit. So, and that's when interest rates rose. So the last time it crashed through the 200-day moving average was in 2018. Then it rose, and then it kept kissing the 200-day moving average. It's almost like touching wood, right? It kissed. I think this is important for you to see. And then all of a sudden, it rose, and then the COVID hit. It drove it down below the 200-day moving average, but then quickly rose above it and really didn't look back. It kissed it again, And then it fell through, it rose up, it fell through, it rose up. There's a reason to believe there that that bear market rally um, was really gonna make it work, right? So it's hard when it moves below the 200-day moving average. It's an important indicator, and then it fell through the floor, and everyone's like, "Oh, it's done." And then the market started this last climb, and it really climbed from about 3660 to where we are today, which is like 4260, just to say it. 3660, it's up 600 points. It's up about 15%. And so now you have a market, and now we're going to clear the drawings for you. And you can see how the 200-day moving average is starting to turn a little higher. And the market is above the 200-day moving average. And so we're going to zoom all the way in here because it's relevant, right? And so the market only recently broke above the 200-day moving average. It broke above it in early August. And so this is like chartist mumbo jumbo to me, because I don't think when a money manager gets a client deposit that they say, well, let me divine the 200-day moving average. I'm going to show you guys something. I was, it's all like Harry Potter, and I was out trick-or-treating with my kids last year, and there was a whole Harry Potter house, and they handed me a wand. I have a wand. I have a Harry Potter wand. Okay? And so my guess is that if I divine the 200-day moving average, I could somehow say Alohomora and open locks with this. That's great. I don't know if that's really true, but I like it, right? I like Harry Potter. Harry Potter was I liked the good, clean fun for the kids. It was very exciting. I didn't like how dark the movies got later on, though. I liked the first couple movies when they were in school and they were talking about school stuff. So this 200-day moving average, it gives me pause. Because the market has climbed through it. And it looks like it wants to kiss its way back under it. But you don't know. We don't really know. I think it's interesting. I think if we look at the NASDAQ and we look at the 200-day moving average, it also just kissed above it recently, August 9th. It seems to want to come back under, though. It doesn't have the same kind of panache or conviction of the S&P. And then we look at the Russell, which is small cap. Let's clear the drawings. They're very distracting, Jeffrey. And we look here, and you can see that also the Russell, but the Russell climbed above it a week earlier, August 4th. So who knows? You've got a market that is starting to rise, and there's really nothing pushing it back. I mean, there's stuff like Corbis that's happening, which is stock specific. Stuff like Verizon. Stock specific. We've got Hallandor Energy. Yeah, there's no weakness there. It looks like Hallandor Energy wants to climb a little bit. I think we're going to have to wait on that one before we get to buy more bling, bling, bling. Bling, bling, bling. Let's see. How about AMS? One of my favorites. Long time hold. Well, it's funny. They're loading a boat there at $2.04. That's real positive on that one. So I don't know what's going to happen, right? You know, you get the interest rates. You got the news. I feel like they're airbrushing the news. I feel like that they are managing the message. Look at that. The S&P 500, it doesn't want to fall. It's flat pre-market. And pre-market is like not a lot of volume, right? So you can really express yourself if you're a large enough trading desk in pre-market. The VIX is flat. Now again, the VIX rose like 15, 18% yesterday. So the fact that it's flat now, it just says there's a new price to buy puts. That's all. Again, go back to Corbis. Look at this thing. 1 minute intervals this morning. This is what I wanted, right? So let's draw that line. So you now see a line in the sand at 23 cents a share, right? Pre-market. Will it hold? Will it hold when the trading day starts? I don't know. Let's see. Is there a wall being built? A demand wall? There's a wall at 22 cents, 21 cents, 20 cents, now 19 cents. And you're going to have to sell through 24 cents, 25 cents, 28 cents. So it looks like they want to stop it rising at that 28 cents level. They think that that's pretty much not going to happen. It could come down 20, 21, 22 cents. It's hard to know. I was shocked yesterday. That this stock would fall as much as it did. I was truly shocked. There it is. 2.74 million shares sold at close. Market on close. 2.7 million. And what's funny is at 2.7 million shares, that's an entire holding. Could change hands. Obviously, dark pool. Only affected the share price by 3.6%. And so, I guess people knew that the trade was coming. And so maybe that's some of the messages here. When you know that there's a big trade coming, and that might have been put in the morning, they might have been being polite to their market maker, because they might have just kind of walked the price lower. 1.8 million shares sold on open might have been... No, that might have just been the mother of all short trades. Jeffrey. All right, maybe I see it now. The stock's at 26 cents a share. They sell 1 million to 2 million shares at the open. They're pumping it pre-market. They're relentlessly pumping it pre-market. I like this story. Because it doesn't cost much to pump a stock pre-market. Unless everyone else knows what you're doing and they make you pay. They make you pay for it, right? And then you sell 1.8 million, even if it was $1 million, $1.5 million for the pool. You sold 1.5 million shares at 26. And then throughout the day, maybe you sold even more. And at the end of the day, you put in your buy orders, you let it know that you'll cover at 21. You made 4 cents a share on 1 million shares. That's $40,000. God, that's an interesting rinse and repeat trade. That is a really high risk trade, though. To make $40,000? Am I doing the math right? So if I did 1 million shares at 4 cents, obviously 1 million shares at 10 cents is 100,000. Yeah, it's $40,000. So if I did 1.5 million at 60 grand, now making 60 grand in a day is a pretty damn good day. But wow, is that risky. And disruptive. Really disruptive on a stock. And now you look at the same thing. Oh, let's try it again. Let's get the suckers going. I'm gonna pre-market this thing at 28 cents. I'm gonna make everyone think today's the day it's gonna go to the moon. Took it as high as 25 cents, right? Thing looks like it's gonna open at 23. You could sell into the I don't know that this is what's happening, right? So trust me on this. I'm just thinking it through. You get a stock trading at like 23 cents. So what do? There are no buy orders in here. And there are really no sell orders here. I mean, you're selling at 24 cents, right? So what do? I don't think it's the small trader driving this action right now. And so maybe nothing happens. Or maybe, it's just fascinating. You could sell 2 million shares at the open. You could trade that many shares and then buy them back at the end of the day. It's, I really got to watch this again today. I don't know, but I feel like I have a better sense of the narrative. 1.77 million shares traded, so they probably got out of their residual, 2.2145 shares. And now they're ready to get back to work. It's interesting that Verizon is dropping. Verizon is dropping through the floor. So have a great day in the market. I love you folks, right? We're not paid to make the videos. So we are making bling. Loving it. Love it, right? So get out there. Do your jobs, right? If you trade, make your trades. Just be careful in the market. It's an interesting market. Market looks like it's trading a little bit higher this morning. The spider is healthy at 427.07. This is not a scary open. And just good luck today. And we are going to be watching Corbis all day today. We want to see how this plays out. This is very exciting for us. All right, hit the subscribe button, drop a comment. We love it. We'll reply. And maybe check out our website at www.chicagoquantum.com. Take care now. Bye-bye.